I will present case study 1 for chargeable income and tax payable. First, let's look at his income detail. Ahmad Ali earned RM95,000 a year as a senior engineer. He also received benefit income such as a company laptop worth RM2,500 and a petrol card worth RM3,000. So his total gross income is RM100,500. Next, we apply the personal relief. He is entitled to RM9,000 for himself, RM4,000 for his wife, and RM4,000 for his 2 children. He also claimed RM4,000 for EPF contribution, RM3,000 for life insurance premiums, and RM6,000 for his master degree education fees. In total, this relief amount to RM30,000. Now we calculate his chargeable income. We take RM100,500 minus RM30,000. That gives us RM70,500. Moving on to the tax computation, based on the progressive tax schedule, the first RM70,000 of his income is taxed at different rates, giving a total RM3,700. The remaining RM500 is taxed at 90%, which is RM95. So the total tax payable comes to RM3,795. In conclusion, Ahmad Ali chargeable income is RM70,500 and his final tax payable is RM3,795 before any zakat rebate. By applying relief correctly, we can see how his tax liability is reduced from his gross income. Now for case study 2, I will explain the calculation on zakat on income and zakat on gold for Ahmad Ali. First, let's look on zakat income. His gross income, which includes salary and benefit in kind, RM100,500. From this, we deduct his compulsory EPF contribution of RM10,440. This leaves a net income of RM90,060. Zakat is charged at 2.5% of this net income. So RM90,060 multiplied by 2.5% equals to RM2,251.50. That is the zakat on his income. Next, we check zakat on gold. Ahmad Ali owns gold jewelry worth RM80,000. At today gold price $485 per gram. This equal about 37 grams. Since the nisab is 85 grams, gold does not reach the minimum threshold. Therefore, no zakat is due on the gold. So the total zakat payable is only from income, which is RM2,251.50. This amount can be claimed as a rebate against his income tax, directly reducing his final tax liability. For these questions, under section CA3 of the income tax at 1967, zakat payment are recognized as a tax rebates. This shows how the Malaysian tax system support Islamic obligation. To qualify, zakat must be paid to approved religious bodies such as Lembaga Zakat Selangor or PPZ Mawib. Payments made directly to individual or organized group will not be accepted. The key difference is that a rebate reduces the tax payable directly on a ringgit-to-ringgit basis, while tax relief on reduced chargeable income. This made the rebates more impactful for taxpayers. However, the rebate is limited to the lower of 2 amounts, either the zakat paid or the actual tax payable. Any extra zakat beyond the tax amount cannot be refunded or carried forward. For example, if a taxpayer owes RM3,795 in tax and pay RM2,251 in zakat, the tax is reduced to RM1,543. This example shows clearly how the rebate works in practice. Overall, this system promotes fairness by preventing double taxation on Muslim taxpayers, encourage zakat compliance, and support democracy al-Sharia, which emphasize justice and equity in society.
Alright, now I will be explaining some strategies that Ahmad Ali can use in the future to improve his tax efficiency. Basically, these are practical steps that can help him reduce his tax liability while also planning for his financials in the long term. First, Ahmad Ali should maximize all personal relief and deductions available under the Income Tax Act. This includes lifestyle expenses like books, internet, or even sports equipment, as well as medical expenses for his parents and payments for insurance or education policies. As long as he keeps proper receipt and record, he can claim the maximized allowable deductions, which will directly reduce his chargeable income. Second, he can optimize education and retirement savings. Contribution to EPF qualify for relief up to 7,000 while PRS give another 3,000. Since Ahmad Ali is still pursuing higher education, he can also continue to claim relief for his study fees under Section 46, especially for postgraduate or professional courses. So here he's saving for retirement and also benefiting from education relief at the same time. Third, he should look into strategic family tax planning. Since he's married, he can choose between joint assessment or separate assessment depending on his spouse's income. If his spouse has no income, then claiming spouse relief is more beneficial. Plus, as his children grow older, he can claim higher child relief, especially once they are entered tertiary education. This reduces his overall tax burden even further. Fourth, Ahmad Ali should leverage zakat rebates. By paying zakat to authorized religious body, he can offset his tax liability ringgit for ringgit. This means the amount of zakat he pays will be deducted directly from his income tax payable. It's a smart way to fulfill his religion's duty while also saving on tax at the same time. And lastly, Ahmad Ali can consider investment with tax incentive. These include approved unit trust, green technology investment, or even medical and education insurance schemes. These type of investments are tax-friendly and at the same time, they help him devices and build a stronger financial position in the future. So overall, by combining these strategies, relief and deduction, retirement and education saving, family planning, zakat rebates and tax incentive investment, Ahmad Ali can really minimize his tax while also planning wisely for his long-term financial goals.
To the first question, which is adjusted income after allowable deduction and capital allowances. First, we start with the annual gross income of 420,000. Next, we deduct the general and administrative expenses and other business expenses which total to 210,000. This given us an adjusted business income of 210,000. From this figure, we subtract capital allowances of 25,000. After these deductions, we arrive at the statutory partnership business income, which is 185,000. This final amount of 185,000 represent the income that will be used for tax purpose and for the retribution to the partners. Into the next question, which is profit between partners and each partner's tax liabilities. The statutory income of 185,000 is allocated based on the profits, the sharing ratios, which is Aisha received 60% amounting to 111,000, while Jason received 40% of 74,000. This allocate reflect their financial interests in the partnership and will be the basis of their individual tax assessments. For Jason's, after deducting the personal relief of 99,000, his chargeable income is RM 65,000. Applying the progressive tax rates, his total tax payable is amounting to 3,150. For Aisha, after the same personal relief, her chargeable income is 102,000. Her tax before tax is 9,900. However, with zakat payments as a rebate, 2,775 is deducted, making her final tax payable is amounting to 7,125 ringgit. This clearly shows the tax benefit available to Muslim taxpayers who pay zakat. Then to the third question, which is business zakat for the Muslim partner share, which is Aisha. Aisha's zakat liability is calculated on her statutory income of 111,000 at the rate of 2.5%, resulting in a zakat payable of 2,775 ringgit. It is important that this payment is made to a formal state zakat institution and documented properly for tax rebate claims.
Okay, so now I'll be explaining how Eco-Fresh Agro Partnership can benefit from agriculture incentive and also how zakat payment can help Aisha with her tax planning. First, the partnership should really look into the green technology tax incentive offered by Malaysian government. Since their business is in the organic farming, they can apply through MIDA and potentially enjoy a 70% exemption on statutory income for 5 years. That's a big deal because it means a huge reduction in taxable income for both Aisha and Jensen, which directly lowers the overall tax payable. On top of that, the joint venture can also claim investment tax allowance on its farm machinery worth 18,000. The ITA provides a 100% allowance on this capital expenditure, which means they can deduct the full amount from their income before tax. This leads to even more savings and reduces the provisional adjusted income before it's distributed to the partner. Next, focusing on Aisha as the Muslim partner, zakat plays an important role under Section 6A(3) of the Income Tax Act 1967. Any zakat she pays can be claimed as a rebate against her final tax bill. For example, the 2070 ringgit 75 zakat she paid in the year of assessment 2024 will reduce her final tax to 9,900. It's very important that she pays through a formal state zakat body like Lembaga Zakat Selangor and keeps the official receipt as proof for tax filing. Besides that, if Aisha is getting income from the partnership or even a salary, she can submit her zakat receipt to her employer. This helps adjust her monthly tax deduction or PCB, so less money is withheld every month, which improves her cash flow. To make it even easier, she could also set up an automatic bank deduction to the zakat institution so she doesn't miss any payment and at the same time fulfills her religious responsibility consistently. So overall, Eco-Fresh Agro can benefit from big tax savings through agricultural incentive, while Aisha can balance both her financial and religious obligation by properly managing her zakat payment.
Now, let's move on to question 1, statutory and chargeable income. The company earns 1.2 million in revenue, minus by 600,000 in operating expenses. It's giving us an adjusted income of 600,000. Next, we deduct the capital allowance of 50,000, which reduced the income to 550,000. This is the statutory income. Since the Technova qualifies for 70% of green tech incentive, we calculate the 70% of 550,000, which is the 385,000. Finally, the chargeable income. The chargeable income is a statutory income minus by the incentive, which is 550,000 minus by 385,000 equals to 165,000. Therefore, the chargeable income is 165,000. For question 2, we calculate the corporate income tax payable. The chargeable income is 165,000 and the corporate tax rate is 24%. So 165,000 multiplied by 24% gives us around 39,600 ringgit. Therefore, the company's corporate tax payable is 39,600.
For the computation of zakat payable on business income of the Technova is we took the total of statutory income which is 550,000 and we times with zakat rate 2.5% and then we got the answer is 13,750. Strategies to optimize tax and zakat compliance while maintaining ESG goals. First is maximize green tax incentive. Technova should fully utilize the 70% green technology income tax exemption approved by MGTC and MIDA. By doing this, we not only reduce our taxable income, but we can also reinvest the tax savings into expanding our renewable energy solutions, such as solar farms, battery storage, and smart grids. This allows us to strengthen our financial efficiency while contributing to Malaysia's green economy. Second is align zakat and tax payment. As a Muslim-owned company, Technova has the obligation to pay zakat on statutory income. For this case, the zakat payable is 30,750. Importantly, under Section 4411A of the Income Tax Act, the zakat can be claimed as a rebate against corporate tax. This alignment reduces our effective tax liability and ensures that we will fulfill both our Sharia and legal responsibilities. Next is adopt Islamic financing. To further align with ESG and Sharia principles, Teknova can replace its conventional banks loans with Islamic financing instruments such as Sukuk, Murabaha or Ijarah. This removes any exposure to riba and strengthens our governance framework, which is an essential part of the ESG model. Next is enhance ESG reporting. Another important step is to improve transparency in ESG reporting by adopting Bursa Malaysia's sustainability reporting guidelines and the Global Reporting Initiative frameworks. Teknova can demonstrate accountability, attract green investors, and build stronger trust with stakeholders. This is also aligned with mandatory sustainability reporting requirements in Malaysia. Next is integrate zakat with CSR. Zakat payment can also be integrated into our corporate social responsibility initiative. For example, we could use zakat funds to install solar panels in rural schools or mosques. This fulfills our religious obligation while also supporting social development, which directly strengthens the social pillars of ESG. Finally, long-term tax planning should be aligned with ESG target. Teknova should monitor new government incentives such as carbon credits, green investment tax allowance, and renewable energy grants. By taking advantage of this, the company remains competitive while supporting Malaysia's target of achieving net zero carbon emission by 2050.